So we've had a fantastic talk about the current best-in-class deployment of FinTech. We've had an amazing session around regulation and innovation and the interplay between those two. And the common theme that's gone through all of those has been the need to think about the people involved, to think about the customer, the wider societal impact, which feeds in extremely nicely to this panel after lunch, looking at ethical finance and how we can build more ethical, more moral, a better bank, query question mark, not sure. But we've got an amazing lineup. Your chair is Nic Hemley, a familiar face on the Bristol tech scene, as a developer and community supporter running the Bristech meetup groups, who had their 50th meetup last Friday, so going extremely strong. Yes, indeed. And of course the Bristech conference, which showcases and celebrates all the tech in Bristol and Bath. Yeah. And that's back next year, around about this time, we hope, in Q3, 4 next year. So that's one to look out for in the calendar next year, not obviously displacing Bristol Techfin 2018, which we also hope will be back around this time. So Nic is also, as well as a champion for the tech community, on the board of the Bristol Pound, so extremely well placed to chair this panel on ethical finance. Nic and your panel.
Great. Thank you, John. So I'm joined today, to my left, it's Dr. Matt Studley, who does robotics, associate head...
No, I really do.
Associate head of department for engineering mathematics at UE. And also Jaya Chakrabarti MBE, who is CEO of the TISC report, which is transparency in supply chains, and also Charles Radclyffe, TEDx speaker, freshly minted, also visiting fellow at the University of Bristol and ex-Deutsche Bank Labs. So, ladies and gentlemen, the panel. So, following on from the sessions that we had before, I think we were touching on the people aspect of finance. And I think that one of the areas we didn't dig into is actually the values underpinning that within the finance industry. So maybe that's one particular aspect we could dig into a little bit further. But before we start, maybe one question out to the floor: where does money come from? Maybe someone would like to prefer an answer. Do you have? Where does money come from? Trees.
Trees. Not anymore. It's plastic.
Yeah. Any advance on trees?
Us, surely.
Cash machine. Mm-hmm. So banks create money through lending, as I'm sure everybody here is aware. So the source of money is originally lending, and I guess if you go far back into the depths of history, we come into the Medicis and the archaeology of money, and I think obviously to some degree that now has been superseded by the complexity and sophistication that we have within the financial service industry. So one of the aspects of this, and keying off maybe the values that inform the industry, perhaps we could dig a little bit into what that actually means. What does a value driven industry actually mean? And can we dig a little bit into what actually ethical finance is? I'm sure there's many definitions, and to try and get a handle on what ethical finance is. So perhaps as a starting question to the panel, what does ethical finance mean to you? And then we can get a handle on some of the aspects here.
Well, with the preface, of course, that I know nothing about finance. I think your question about where does value come from and what is value is really interesting, because what we tend to do as a society is we confuse change with progress. Because surely progress, we have to have some sense of a place where we're going, a destination in mind. So it seems to me that the questions about values and hence ethical finance, why are we going where we're going, requires us to answer where do we want to go. And I don't think that we collectively do that.
So in terms of where we want to go as...
Yeah, what sort of world do we want to live in?
Right,
yeah.
So it's a futurism. What sort of environment or industry do we want to see?
Yeah.
Do we want to create?
Yeah.
So what aspect of that are you particularly interested in? Is it, for example, a disruptive change to the industry in terms of values? So I think we heard earlier on about how challenger banks can differentiate using customer experience. Could we also, for example, differentiate through values? Is that something that we can use as a positive force of change?
Yeah, for sure. Yeah. I mean, but then there's a huge plurality of opinion about what sort of future we want, what sort of lives we want to lead, as is evidenced by people's disagreements about politics. So, I guess having lots of different propositions based around value and ethics in finance is going to work, isn't it? Mm-hmm. People will choose the sort of offering which chimes with their own set of beliefs. Mm-hmm. Yeah.
So you mean picking the institutions we're involved with through our values. So if we have a certain set of values, we will pick a certain institution that chimes with those values. Is that what you mean?
Well, I'd hope so. Yeah.
Okay. Jaya, do you want to ethical finance?
Ethical finance. Okay, right. Let's think about banks in particular. It would be nice to think that if I set up a bank with a 2.0 bank, or is that like really old? Are we at 3.0? I forget. Whichever version it is, that the fact that I have this bank account means that I have been held accountable for a number of things. It should be that this person, because they have that account, they must be more trustworthy than if they had a banking 1.0 account. That would be really good. It would be nice to know that the money that was going in and then being lent out to the world was going to a planet and people positive investment. It would be nice to know where that money was going. It would be nice to know that it was fairly distributed, transparently. It would be nice to know that the bank that had its suppliers and its customers, it was going way beyond, just knowing your client. It's going into, well, actually, are they compliant in a number of other areas that would mean that they are good to do business with? How can we ensure that the business environment that we create with the money that we lend is conducive to the right outcomes for people to survive and exist and thrive and grow? Mm-hmm. Is that too much to ask?
So, but transparency. I mean, clearly through this report, transparency is something that is very, very close to your heart.
Very much so, because I think you can reboot trust and integrity with transparency. Because we've lost a lot of trust in what's happening today. Has everyone mentioned Brexit already, or am I the first? I wasn't here this morning, so I can't tell, but lots of things have happened as a result of losing that trust. And nobody knows what truth is anymore. But I think by being transparent about who you're buying from and who's buying from you is one of the first things. Corporate transparency, supply chain transparency for the public good.
Mm-hmm. Okay. Charles, any further comment on that?
Yeah, sure. So, hi everyone. I was a bit worried actually when I was invited to join this panel for a couple of reasons. One, because I was actually working for one of the biggest banks in the world at the time, and I was deeply concerned that anything I might say might be incompatible with that firm's media police. So it's great. I don't work for them anymore, so I can say what I want. But there are chattering rules, so please don't quote me. If any journalists in the room, please don't quote me too much anyway. And the other thing I was concerned about was about talking about ethical finance, because I think working in the industry, I have some kind of perspectives on what a bank should and shouldn't do, and what people in banking should and shouldn't do. But I don't think that really particularly qualifies me that much to talk about ethical finance, other than as a consumer, or as a colleague. But then I was reminded by Nic and by others that actually I think just working in banking probably does qualify me to speak about ethics. And I thought back to some examples of total ethical failures in my past, not personal ones, but ones on behalf of the organisations that I work for. So I thought actually it would be quite maybe illuminating, kind of sharing some of those and kind of framing my thoughts around them.
So are these examples of where there's been a loss of trust with the customer, presumably it's an internal issue, or has it actually been the actual other side of the coin, which is within the bank, internal facing to the bank, and a structural change, or the systemic change within the bank.
Yeah, well, so I think in each example it's about a bank, because we think about these banks as being this kind of thing. It's not. It's just tens of thousands of people, tens of people if you're Sterling or Mondo, but tens of thousands of people working. So it's not a thing. It's just it's not an entity. But I think the failures I think about are ones where it's just so trapped in its own bubble that it can't really think about itself externally of that. So, to give you an example, the first bank I worked for in the Channel Islands, which is quite topical today with the Paradise Papers. But we weren't doing anything sort of avoiding tax. I was hired in to help a bank implement a code of conduct. It was the Jersey Financial Services Commission. Until that point in 2007. Fund administration was an unregulated activity, essentially. The regulations were pretty light. Jersey was a bit concerned about being seen as being a light touch regime. This was 10 years ago. And the JFSE implemented the Code of Conduct in order to try and kind of have something to point to and say, yeah, we're a legit area. And I was hired on behalf of the bank to implement that Code of Conduct. So I knew nothing really about banking regulation. I was in my mid-20s. I had no idea why I was hired. I was an IT guy, a tech guy, and so I thought it was quite amusing. But they were paying me well. It was offshore, so it sounded like a good gig. So I went off to Jersey and I read the Code of Conduct, which reminded me why I didn't want to become a lawyer. So I studied law. Sorry, Adrian, wherever you're hiding. There you go. I studied law and I realised that I didn't want to do that much reading for my living. So first thing I did was I read the Code of Conduct, which was tediously boring. And then I went about putting a plan together and looking at the business, looking at the different operations we had in the bank, and seeing where we might have risk of being non-compliant. And I put together an assessment of things I thought we did that were okay, things that I thought we were definitely not doing okay, according to the new Code of Conduct, and things that were kind of in the kind of middle ground. And I went back to the sponsor, who's the COO, and I said, look, here's my 8 weeks piece of work. This is what I think when this Code of Conduct comes in, we're going to be at risk of. And he said to me, you've totally misunderstood the reason you're here. And it's not something you really want to hear.
To tell you that.
And he said, why do you think we hired you? And I said, well, it's not because I'm an expert in compliance or regulation, clearly. And I said, well, because you as an organisation are worried about not being compliant next year when this Code of Conduct comes into place, and you want to have a risk assessment and you want to know what we need to do in what order. He's like, no. He said, this isn't about trying to make the bank compliant. This is about justifying to the regulator how we don't need to become compliant. And that was my first kind of learning about the bubble that we lived in, and about what and that was a particularly it was pre-crisis. I think there was a different culture, and that was an organisation that went through some significant pain in the crisis because of the way it behaved. And I'm sure now it's a much different organisation. But that was my first kind of clue into oh crap, this is an industry that doesn't think the way that I naturally think.
So you touched on there about sort of the loss of trust from the public, and I guess 2008 financial crisis was a pretty major event in terms of this trust relationship that we were touching on before. So how does the industry and how do banks rebuild that trust? And does ethical finance have a component within that? Jaya, do you?
As I've touched upon before, if you're going to want people to trust doing business with you, then you have to evidence it in some way. And if it's not been clear before, then you're going to have to work much harder. Banks, especially given the crises that have happened, I don't think you're starting from below zero now. Below ground, people have to be given a really good reason. And we've seen that ethical banks have kind of not necessarily hit the mark there either. So the first thing you do is you start to look at everything that you do, all the business that you do, your staff. It starts with your staff, and you work your way out, so that you can re-establish that baseline again. And it's not easy, but supply chains is one thing that's outward looking. You have to look inwards too. So it's what's inside that counts.
So with the inward looking perspective, do you think that there are questions around how we actually structure these organisations? In terms of the majority of banks are probably for profit, for shareholder profit. Do you think that is something that we need to rethink?
The game needs to change. The game definitely needs to change, because at the moment the frameworks that everyone is trying to meet, the economic rules that we play to is about profit, and it's not so much about planning. We know this from everything that's been happening recently. So if you're going to change a structure, then you've got to start to set the ground rules in terms of your what you can expect from people who are working with you, what shareholders can expect, but also what you invest in. It's everything.
So, we're living in a time of unparalleled change, aren't we? It's forecast that by 2050 there's going to be no viable fish stocks in the ocean worldwide. There's only 30 or 40 years left of harvests in British soils. We've just found out that pollinator populations have plummeted by 75% in the last 20 years in Germany. Plastic pollution in the North Sea has gone up by 150% in the last year. I think collectively we're getting to the point where we've got to stop. I won't be rude, but no, we've got to stop mucking around. We've got to have complete change. I won't use the term revolutionary change because
System change.
but it's got to be absolutely systemic, isn't it? The way that we do business, the way that business as usual happens, is not sustainable, and we have to change it. And having banks that are very actively ethical in the way that they direct their money is clearly a really important part of this. There's a lot of stuff which we collectively do which is really stupid, and we ought to stop doing it, otherwise we're not going to be around to do it anymore.
So how important is it then that place, I know we're here for Bristol Techfin, it's got a very firm sense of place. How important is place within ethical finance? And I guess I'm thinking of with my Bristol Pound hat on in terms of local supply chains, in terms of regionalising banks that obviously which would be flowing against the tide from demutualisation forwards. We've lost that regional identity and perspective on banking. So how important is place, do you think, to this movement, to this ethical financial movement?
Massive, absolutely massive, because what we've seen is there are things that are going wrong on a global scale, on a national scale. The thing that we can control and where we can see impact is locally. So if you're going to make change and change behaviours, then you're going to have to show change locally. And that has to, that's a whole new level of transparency. It's not just sort of transparency of supply chains way over there, way into Bangladesh or wherever. My level of transparency, my socks, God knows where they're from, but my clothes are from Bangladesh. They're actually ethically sourced, believe it or not. But my shoes, they're vegetarian, but I have no idea who made those. Then we look far locally. We look far locally at where we're getting our food, whether or not there are businesses that we should be supporting. Can we make it easier to do business with those people that are actually fueling the rest of our society? That's really critical. We must have a local part of that action. No matter what we do with our money, we vote with our money. Businesses vote through procurement. So if we're looking at democratic failure, then every time we spend that pound with someone else without knowing where it's going, that's a failure.
So do you think a local bank then, a local bank that it's serving the needs of a local population using a local supply chain? I mean, is that what
part of the
we're talking
mix?
about?
Definitely part of the mix.
Okay.
So I think when I think about local banking, I think about those HSBC adverts the last 15 years or so. When you fly to any airport in the world, it tells you that they're the world's local bank, and then they kind of juxtaposition something against each other. And I've always found it quite amusing, because I couldn't give a monkeys about some dude in some country I've never been to, and his banking services, when I can't just get the same kind of experience from one bank to another bank. It was HSBC. I used to bank with them in the UK. Went to open a bank account in the US and couldn't do it. I had to go through an incredible amount of bureaucracy and paperwork. And I just found it so frustrating. So I always looked at those adverts with a particular view in mind. But from kind of working in banking, I know how incredibly important it is in terms of knowing who your customer is and preventing financial crime as a result. And I think this is a job that some of the global banks are kind of burdened with. The cost of doing that is incredible. The cost of doing it, the paranoid about making a mistake, and
Hamstrung.
And hamstrung. And so I think there's a couple of things. I think one, in terms of like more ethical finance, a bank isn't allowed to finance terrorism or money laundering or all sorts of things for good reason. And maybe we should be extending that list of things which are unpalatable into maybe organisations which are polluting the planet or causing suffering to people in the world in other ways. So maybe that list of things that we shouldn't be financing should be increased. But I think the other thing which is again interesting from a position of place is that the last 5-7 years or so, the whole financial services industry has been consumed with this talk about distributed ledger technology, blockchain, cryptocurrency, whatever we want to call it, or whichever part of that you want to focus on. And the very interesting thing from a banking perspective is that it totally disrupts the way that we do things, potentially. But at the same time, cryptocurrencies are by their very nature pseudonymous, so we don't know who it is that you're transacting with. And that makes it impossible for a bank to do the very core thing that it has to do from a regulatory perspective. And I think it's very interesting, if we can't address that problem. The money is just a store of value at the end of the day. Money is nothing. Money is just this nebulous concept. Currency is something that's important. That token that we give to each other is important. And trusting who it is that's giving you that token is paramount for regulation to work. And I think banks have to figure out that problem.
So maybe putting cryptocurrency to one side, do you think that there's a challenge perhaps from the crowdfunding type model where you can potentially have a one-to-one relationship between the lender and the borrower, which sort of semi-harks back to a more ancient way of doing banking? Is that also part of the building back up trust because you actually understand who it is lending?
Well, I guess it's an important component, but it doesn't seem to me that it can be the whole of the story.
No.
Because the regulatory structures enact our common understanding of morality and ethics, and so presumably if you have people who are asking for money to do a whole variety of different things, some of which are more laudable than others, and then you get a variety of people who are investing in these things according to the amount of money that they're going to make back from it. This isn't going to necessarily advance us in the direction we want to go. But I'm not an expert on finance.
The crowdfunding is more important due to the aspect of ownership, so it won't necessarily matter about the return that you make. It's more about the fact that it's something that you as a city can own, or as a neighbourhood. For example, with the Bristol Energy Cooperative, they have solar panels on roofs, and I rather like that concept, not necessarily because I was expecting to make my million, and I didn't put very much in, but I did put money in because I wanted to be part of that solution, and that the reasons behind investing in particular things are not necessarily about the return. You don't want to lose cash, but you do want to have that level of ownership. And I think, again, that people have lost touch with what they can own, and they're starting to see their parks disappear, their healthcare services disappear. They want something that they can feel a part of and own.
So you're talking about ownership in a wider context, not just ownership as I guess the narrow definition would be ownership in terms of equity ownership,
It's
being a
about
shareholder in something rather than
success, a stakeholder, I
right.
suppose.
So a stakeholder in a community good, whether it's energy or other.
But it's also an articulation of how much of a stakeholder you are, I guess, to an extent.
Okay. So at this point, I'm guessing that there are probably a few questions from the audience that these conversations have been throwing up. So maybe we could open out to the floor. Are there some questions that you'd like to raise? One over here.
No, it's okay. Need the exercise.
Hi, I'm interested in ethical finance as a kind of end-to-end solution, and there's always the concept that money obtained unethically from invalid sources but used to finance ethical ventures, for example, poses philosophical issues. And I guess what I want to understand and what I'd be interested to know from your point of view is true end-to-end ethical finance an impossibility? And if so, what should the priorities be for the solutions? I mean, we've spoken already in this very short discussion so far about the environment, financial crime, regulatory dishonesty, tax structuring versus tax evasion. That's a myriad of different issues to try and resolve through this one banner of ethical finance. So is it ever going to be possible to take away all unethical practices from finance in such a way to create a solution that's sensible and viable going forward?
I'm sure it's not. I'm sure it's not, no. Because, the exchange of resources is, there is no evolutionary stable strategy that solves the game. It's any game with an exchange of resources can be invaded by hawkish strategies which will exist at some percentage within the population. So you can never solve the problem. All you can do is keep on squeezing against it, I think.
I think it's a very good question. I think that end-to-end is not possible, I agree. That money's been around, it's been used a lot. It's kind of like saying, well, that bit of air over there, I'm breathing it because it's pure, but we know how many lungs it's probably been in and God knows what else. So, but you can reform it. You can turn it to good. You can use it as leverage to achieve something good. I think that's what we're dealing with here. When you're looking at ethical, it's not purity. Let's not get the two confused. Purity is not something that we should even be entertaining. It's not possible in the financial world. What is possible is making sure that the resources that are dispatched and invested, they are achieving what is good for the organisation, assuming it's ethical, and for the greater good.
So I think it's impossible by definition would be the answer I could come up with. And I think that's because we kind of tend to conflate concepts. So to me, what is ethical is very different to what is legal. And ethics is it's a personal question I have. My own personal code of ethics is probably very different to maybe other people here. And hopefully not too different. But there's definitely going to be differences. So, when I saw, yesterday, Lewis Hamilton avoiding VAT on his £16.7 million private jet, well, yeah, we have a different view.
Yeah.
Because, did he evade tax? No, apparently. But he definitely avoided it by structuring it to a different way. And so, was that ethical or not? That's a question, it's a judgment call we all have to make. So I think, because ethics is such a personal thing, I think it's a definitional impossibility to say, can you have an end-to-end ethical system? Can we eradicate financial crime from the financial system? Yes, we should do. I was horrified by the previous panel when Dave Tong, I think he made such an important point that didn't get it's not enough airtime. He said that the amount of money spent on regulation is increasing by so much, and is this a measure of success or a measure of failure? To me, it's a total measure of failure.
Yeah,
if we're getting anti-financial crime and financial regulation under control, then we should be spending less on it. And the fact we are spending so much on it is an indicator there's a problem. So that would be my answer to that question.
So as a follow-on then, is it possible to have a finance system that actually works for the poor and for the disadvantaged and have a more inclusive financial system that's not
justice,
just
you mean?
working for the rich, effectively?
So I think we have to kind of separate again different concepts about financial system. I don't think you can separate economics from politics and our kind of how we live and how we treat people. So I think can we have a system where the poor are treated fairly? Hopefully, surely most people would agree with that. But that requires not just a rethink to the financial services industry. It requires a bit of a rethink in terms of our economic structure and our political structure as well.
Very much.
And I think when we talk about money, again, I feel strongly on some of these things. Let's be careful about what exactly we're talking about. Are we talking about currency, as in a store of value? So the money you have in your account, the value you have in your accounts, in pound sterling or euros or Bitcoin, whatever that is, and then money meaning capital, and how capital is used in order to influence things, and then money as income as well. And the poor, the people that we consider to be poor, those without capital, maybe with negative capital, they owe more than they have in assets, maybe on low income, and how do we get those people to have more of a voice within the financial services? How does the financial services industry help give those people more of a voice?
Mm-hmm. Yeah. Okay, maybe we can open it out again. Question at the back there.
So do you have any opinions about the ethical nature of the financial instruments that we're trading? We're trading complex derivative products that actually nobody really understands. And we're riding these horses and they get out of control very quickly. And could we not constrain the system by saying, actually, these are immoral, we shouldn't be trading these types of instruments?
So the ethical nature of financial instruments, derivatives.
I'm looking at you.
We've gone from law to ethics to morality.
It's great.
So, I mean, I write a blog called Data Philosopher, which is all around kind of the ethics or the societal impact of technology. But I think one of the great liberties you've got of calling yourself a philosopher is you get to ask the questions and not volunteer the answers. And that's the problem with being on a panel, is that people look at you to answer the questions and not ask them. Should we be trading things that we don't understand? I have a personal view on that, which is no. But I think a lot of the time people, what they understand and what they don't understand, they might not understand the intricate detail of what's behind a derivative product. But what they do understand is that they can buy it for a price and sell it for another, and there's profit, or they can borrow it for a price and pay it back 2 days later for a different price. And that's kind of really what the financial services industry is built on. And I think one of the previous panelists talked about we need to think about how we incentivize people, not just around short-term gain, but on longer-term things. So, yeah, it's a very tough one.
Do you think we can be more transparent about the hidden price of those kinds of transactions, though?
Yeah, I mean, I think in terms of the supply chain behind certain products, absolutely, I think it's necessary to do that. I mean, I think most of us go through life not thinking about what it is that we're involved in, and if we're making a deposit into our savings account, not that many of us have that luxury, but if we were to, is the organisation that we're paying that money to, is that investing in industries that aren't good, or simply just exploiting people at interest rates that they can't afford.
So what are feelings on something like the B Corp movement, which is effectively like a I don't know if people are familiar with it, but it's almost like an organic certification for institutions and organisations. So having some kind of clear labelling for the consumer, so they can understand the nature of the institution and the business that they're dealing with. So, Jaya, it sounds like you've had some dealings with people.
Yeah. So when we set up our open data register, I thought it would be enough to say that we're open data, we exist to ensure that supply chain transparency translates to no exploitation within supply chains. And I thought that would be enough, but because we're a company limited by guarantee and we're a social enterprise, profit with purpose, and I wanted to show that businesses could do the right thing. So it's kind of a matter of principle that I wasn't setting up as a charity. However, this has caused a huge amount of issues in terms of people thinking, well, actually, and we don't know what open data is, and we don't know what your purpose is, and you know what happens if someone buys you out and it wasn't clear to them that the data is in an asset lock of its own. It doesn't matter what happens to us. So we decided that a B Corp was a good way to go, and a B Corp is a way that you express your values in terms of what you're trying to do for the planet, for your people, how transparent you are, and you build it into your articles of association. You build it into the framework of your business, so it's right from the start. It's very transparent, and you report and you are held accountable to that every single year. I loved that concept because I personally think that it is about enabling businesses to be seen as a solution rather than just a problem. And if we continue to say that every single business, because they are corporate and private entities, and that makes them evil by the fact that they are not a charity. And actually, I've seen some really crazy charitable kind of behaviours in the data that I've been looking through in terms of the finances and the accounts and the shiftings and the mergers and acquisitions. So I think we have to change that, and in order to do that, we have to say businesses should be able to bank on their ethics as much as their purpose to make cash. You should be able to express that in a way, and it's one of the ways that I think is really worth going for. It's an American concept. Not very many people know about it, but the more that do, there's a growing movement here in the UK. I'd recommend it for anyone who's thinking.
But is that just the sort of the revolutionary? Is that just slightly nicer capitalism rather than something that's going to replace capitalism? Yeah, I mean, is it a slight modification, or how far does it actually go?
How far do you want to take it? I think that's the key. The main thing is that you're transparent about what you're doing, and then you can enable people to make a judgment one way or the other. So it's another way of saying you can go down a charitable route, and then by the fact that you're a charity, that means no one's going to ask if you're good or bad. You just are. And I don't think we can do that anymore. I think we have to hold every organisation to account. Everyone needs to be able to know where that money is going to and what is being done with it.
So it requires a very high kind of give a shit threshold on behalf of the individual, and that's, I think, the problem. And I think we are so conditioned today in 2017, living in this world where credit is kind of easy to come by, relatively speaking, for a lot of us. And for a lot of us who can't really even afford that credit and shouldn't perhaps have that credit, it's easy to come by. But it gives us more comfortable lives, and therefore we kind of accept the trap that it creates for us without really thinking about it, or maybe by sticking our head in the sand and not thinking about it deliberately. And so I think in order to... and so the entire financial services industry is basically powered by that oil, that petrol kind of runs through the system is kind of the credit industry. And so it requires us to kind of make that conscious decision that, do you know what, I'm not going to buy that £1,000 iPhone on a 2-year contract with my phone provider. I mean, £1,000 for an iPhone. It's insane that we spend so much money on these things. I mean,
until you realise what goes into an iPhone and who's suffering for it.
So
that as well.
Yeah.
So
but we were quite happy to take it on a £30 a month contract for 2 years.
It's very interesting that you use the analogy of the oil, the petrol, which is running the economy, isn't it? Because it's this unsustainable behaviour, which is, in the very realist sense, at the basis of what we're doing wrong. Which, if you wanted to abstract it, it would be that over the last 200 years we've learnt how to dig up sunshine that fell a long time ago, and burn it and put it back into our local environment.
I think the analogy for banking or credit doesn't work because fractional reserve banking, the money is just invented. It's not as if it's stored value. It's future value. So all of us are pawning our future existence in order to get stuff today.
Yes.
And we're so used to that. We're so conditioned into that. I think it's very hard for an organisation that has ethical values. I want to kind of do that, but has good values, ones that kind of don't exploit people, don't invest in things which are dodgy. It's very hard for those organisations to compete unless enough of us vote on our feet, or enough of us go to work for those organisations and agree to give up our time for a lower fee. And I think that is a big change from the mindset we have today. Whether it's an impossible change, that's for you guys to decide. But I think that is a big change.
So you believe it's happening on different levels. It's happening on a personal level. You're actually choosing to a slightly different career or a slightly different path, as well as being attracted to the organisation that is well aligned with your values. So is that how you see it? Sort of operating on different...
I think it's about first of all about understanding what's really going on. So when I buy that new car and I'm buying it at 0% finance for 3 years, I'm not actually buying a car, I'm renting a car if I'm doing that. And understanding that that's a choice I can make. But what I'm really doing is I'm locking myself in to, I'm basically pawning my future income in order to get that asset today, or that liability today really. Versus actually, do I really need that new car? Can I just make do with the old one? Or do I really need that £1,000 iPhone? £1,000 for an iPhone? It's insane. My Nokia 10 years ago was like £100 or something.
So let's go back to the audience again. Are there any other questions from the floor? When in the centre there.
In the centre.
Sorry?
Yeah, round the front. Yeah, go.
What sort of time scale do you think actual change will happen on? Because it seems to me, like you said earlier, people have the choice of matching a bank with their own ethics. But in reality, that is a choice a lot of people don't have, because what they care about more is the fact that it's going to cost them X amount less to go with this person who might be doing really dodgy stuff that they choose not to look into because it makes them more uncomfortable. So until it's actually more profitable for a bank to act in a certain way, are they actually going to do it in reality on a scale that makes a difference?
So really, you've got to have a whole bunch of different drivers, haven't you? Banks' reputations are important, whether it's a reputation for acting ethically or being trustworthy. And then there's the regulatory framework and the rigorous prosecution of infractions. There's a whole variety of different mechanisms that can be brought to bear. I don't think it will in itself, will it?
I think it depends on the level of consciousness that you get in your average consumer. Because at the end of it, if the consumer doesn't care or doesn't have time to care or can't afford to care, this isn't going to work. So we've got a whole cycle of things, and right now we're looking at automation and the impact that will have on people who ordinarily would not be able to get a job if that job was automated. You've got the universal basic income that's starting to sort of be talked about around. When people can afford to make those decisions, then it will get faster. And until then, I mean, for supply chain transparency and ending modern slavery, we bandy about sort of within our lifetimes. I'm hoping with technology that will, drop to like a half our lifetimes, that, my mission for that part of it will be done within hopefully 10, 15 years. And then I can move on to, other bits of social justice. But we aren't talking about a short-term thing until that is raised sector by sector, community by community. Everyone must see impact for them to feel that they are able to make that change. They've got to feel empowered. Catch-22.
I'm going to admit to something that I think very few people in this industry will admit to. I think we're overdue another financial crisis, and I think that is going to be the thing that causes us to think things differently. I think it's in order to get ethical banking, you need to have first ethical banking customers. I think it's going to have to be you and me that make a change in terms of which organisations we bank with and which organisations we take financial services products from, and it also requires us to think carefully about what those financial services products are and are they truly appropriate. But that's a level of consciousness that most of us don't have. I think the financial crisis 10 years ago was a near-death experience for Western countries and a lot of big companies as well. And what we've done is we've created an insane amount of new money out of thin air in order to prop up the system, and it's worked for 10 years. I don't know how much longer it will work for, and will it last my lifetime? I doubt it very much. But I would like to think that what the governments and central bankers have done has invented enough money and pumped it into the financial system to give the patient life support long enough for the patient to fix its problems. But will it be enough? I don't know. How long?
But I think the again, as an outsider, I don't. It seems to me that this value which has been invented, the money that's been created, what's happened since the crash is that there have been a small number of people who've got very, very rich, a very large number of people who've seen the services that they rely upon dwindling and being ground away. There are many, many people worldwide living in poverty. So I don't know whether we could really say that the money that's been created has propped up the system. I think all that it's done is it has equipped some very sumptuous lifeboats.
We haven't seen a financial crisis in 10 years, and I think that's as a result of the amount of money that's been put in. And I think it's a good thing that we haven't seen a total collapse of the system in the last 10 years. And I'm not advocating that we should see a total collapse. It's inevitable that there are those who've disproportionately benefited from it at the same time that most of us haven't. And all I'm saying is I hope that we've created enough in the system in order to keep the life support system running for long enough for us to fix it.
Yeah, that
because the
transfusion.
current system that we have, and I think it's an economic, financial and political system, is requires us to rethink it if we are to make the sort of changes that we talk about here.
We're still hemorrhaging from that transfusion, though, aren't we? It's still, it's leaking out in other ways. So you're right that it is coming. It's just whether or not it's enough to change behaviours. But actually, I'll reposition that. I shouldn't put pressure on the consumer on their own at all. It also means leadership from the top. If you're going to change behaviour, then the world has solved this problem before in the form of, do you know how they stopped Chinese foot binding in China? So the story goes, and it's game theory effectively, it's called a coordination problem. People in China back in the day were binding the feet of their daughters because there was a perceived payoff. And if you did it, apparently you would marry well, or you had a better chance of marrying well. Marrying well, of course, changed your financial situation into a much better one. But of course, if you didn't do it, you're not even playing that game. So reformists had battled for a long time, shouting, boo, nobody should be doing this, is really terrible. They petitioned government, nothing changed. But then in one city, and I couldn't tell you which one, but it begins with T, some reformists did a bright thing. They went to the families at the top, the rich families. They formed a fraternity and then convinced them to say something. So they had an event, they were all in one place, a square or a platform or something, and they all stood up in front of everyone. They called everyone to this event. And these families stood up and said, we will not marry our sons to your daughters if their feet are bound, and we will not do this to our daughters either. So the critical thing here is that you can say that on a one-on-one basis and nothing happens. But because it was done in one place where everyone saw that the rules were changed, within one generation, foot binding had dropped down to 1%. One generation. We can change behaviours when we've got corporate big spenders, public sector big spenders at the top saying we are changing the rules now, all at once, one place. In my little sort of fantasy world, our register is a platform for system change. And it can be, because we are monitoring supply chain transparency. It will take a number of sector leaders to stand up and say, we are backing this, we are pushing it through our supply chains. We will not do business with people who do not meet with the ethics that will deliver us a world that we all deserve. It needs to happen from both ends.
Mm-hmm. Thanks, Jen. So we've got about time for one, possibly two more. So any other burning questions from the floor? Adrian.
So just latching onto your point there, Jaya, and I think it's absolutely a great way to look at it, but is there not a massive conflict of interest and a protectionist reaction to that? And if you acknowledge that, what is the step to get over that?
So we know that when you have a bundle of laws that are there to keep businesses in check, you've got an economic system that is about the output being money, and companies behave like organisms, and they will seek to survive in those environments. But inside those organisms are human beings who are parents, who have vulnerable people in their lives, who are human. And it is those people that will make that change. It won't be the organisations. They will work to the rules that they are given. But the people within them, if we can give them a strong enough business case, then they can help change that behaviour. I'm not suggesting it's easy. If it was, I'd have sorted this whole damn thing last week. But bear with me, it will take some years. But I think if we make the data apparent and transparent and available, then that data will enable them to go back into their businesses and organisations and say, do you know what? People are already doing stuff about it. That horse is already bolted. That horse meat is already in our supply chain. I am working with Tesco. They are members. They are fantastic. These clothes, I know, have been responsibly sourced. They are, anyway, I'm not advertising. But do you see what I mean? You do one thing, you do things. You don't think about solving the entire problem, but you try and live your values in the way that you can, in the way that you can afford. And if all of us are able to do what we can, and then take that influence back to our organisations, I think it can work.
But I think it does require consumer change as well. I think we were talking earlier about automation, and it's a pet subject that I'm very keen on right now. But to me, there's a huge amount of anxiety that people have about their incomes and about the level of debt and about their jobs and the security of their jobs and whether automation will take jobs or whether Brexit will take jobs or et cetera, et cetera. But to me, that anxiety that we have is because we don't live like our grandparents' generation did. We don't live within our means. We forward pawn our income, and so it means that I have to work. I have to have a job with a certain salary in order to pay my obligations. The amount of disposable income most of us have at the end of the month is quite small, and that's because we've taken on all these commitments. And I think while we live in a culture and in a society where that is the norm, then we are going to have a financial system that is going to have that pent up tension in it. And I think we have to slowly unwind that if we're to move into a world that is sustainable, where people don't have that level of anxiety about their futures, and where we have the inequality that we have.
Unfortunately, we're just about out of time, but maybe if there's any burning closing remarks that anyone would like to impart, then please be my guest. Matt?
Golly. Something pithy, then.
Ideally.
Yeah.
Charles?
I'm going for the loo, and so I'd like to understand.
I have one thing.
Yeah.
Right, if there's one thing that everyone can do and that I will continue to do is ask questions. So the first part of the thing about ethical is, do you give a shit? And can you demonstrate how much you care about that subject to the people that you're buying from, to the people that you're selling to, anyone in the street that will listen? Ask questions, because these days I don't give up prawns. I was told very authoritatively by the fishing industry that if I wanted to influence whether or not those prawns were gathered by people who are in slavery, I shouldn't stop buying it, but I should tweet every time I have some. You'll know when I've had prawns because I'm tweeting.
Super.
What do you tweet about? Is it about prawns?
Were these prawns ethical prawns?
Not just. Yeah.
Okay. And on that note, we're going to close. So many thanks to the panel today, to Matt, to Jaya, and to Charles. So if you join me in appreciation of the panel, thank you.
Thank you.